Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are starting this Monday, start of a new week, coming to you live from the CNBC-TV18 Oswal studios. And it's going to be markets. It's an interesting week, very interesting week lined up, and we'll tell you why. The call for elections have been announced, dates are out, but that's only the tip of the iceberg. I'm Prashant, with me my colleague Sonia, and Reema is with us today as well. Guys, hi, morning.
Hi, morning. Action-packed week, right? Markets, central bank action. And of course, the mid-cap, small-cap correction that we had last week, right?
Absolutely. I mean, it was tough, right? The last couple of weeks have been quite tough. And the Nifty is down, 2% in the last many days. I mean, it would be interesting. There's nothing expected from the Fed action this time around. But be that as it may, lots of cues to track.
A lot of cues to track. And, you know, we'll just kick it off with, as always, where we left off actually last Friday, right? And last week was a down week for broader markets. Mid-caps and small-caps were down 5%, 5.5%. The Nifty was down 3% for that matter. But on Friday, because you got to sort of, markets are always incremental, right? A small-cap index bounced, and it actually ended into the green on Friday. So that was a 2% plus kind of a bounce. The Nifty, no such luck. There was a recovery, but the Nifty index was down about 0.5% or so. So the big pain had happened in the small cap index. From the highs, it had fallen 14%. And there is some signs of semblance which is starting to emerge, that maybe things are going to be quieter, slower, smaller. That's exactly what we need. We don't want big swings to sort of scare people away or sort of scare people out. So we kind of left off on Friday. It was a bad week. It was a down week, but we left off with semblance of sort of order as far as the broader market is concerned. Now, if there was help from the US market, it would have been great, but no such luck. Risk sentiment as far as the US session is concerned fizzled out. The Nasdaq was down a full 1%. You had the S&P 500, which was down about 0.65% as well. It was a mix of things. There was some softer data, but tier 2 data, not the jobs number or the CPI, but really second level data. And there was, of course, also massive, it was options expiry day, and it was one of the largest that we've seen. Trillions of dollars of options in the US market expired. So when you look at the US market close, you look at the Nasdaq down 1%, keep this in mind. I mean, maybe this distorted the picture at the margin as well. Now, yields in dollar, they were absolutely flat. The 10-year at about 4.3. Of course, if you look at the last 1 month or so, it's moved up quite a bit. But day on day was flat. Dollar index was about 103.4, nothing at all. This week, there are 14 central bank decisions, right? 14. And in six of them, there is expected to be a change. Mostly, actually, it looks like there'll be... globally, of course, we're talking about a rate cutting cycle perhaps starting to begin. But we'll see. 6 of them look like they could do something. The most important one, where there will be sort of maximum amount of ink spilled, is going to be the decision from the FOMC. That is on Wednesday. We'll react to it on Thursday morning. And there is no change expected. And since there is no change expected, the risk only at the margin is if the Fed decides to send a hawkish signal, not by increasing interest rates or anything, but if it changes the dot plot, which is to say, I mean, you know, say, for example, they're saying that we are expecting 3 rate cuts this year, later this year, they bring it down to 2 rate cuts, something like that. And that'll be a hawkish signal, but that we'll see. Many are kind of starting to turn around to that point of view. There is also, of course, the Bank of Japan. That is tomorrow. And the only reason I'm mentioning this is because there is a expectation that Bank of Japan perhaps will also do something, a rate hike. It could be the first hike for the Bank of Japan since 2007. It'll be the last central bank, if it decides to hike rates, to exit the negative interest rate policy. So, I mean, it's quite incredible, right? You got the world, which is looking at rate cuts. You got the Bank of Japan, which perhaps, if you believe some 10 news articles over the last 7 or 8 trading sessions out of the Japanese media indicating that they are ready to move on the upside. This is significant, and we'll talk more about this. I mean, yen is the preferred sort of, the choice of currency as far as a carry trade is concerned, and that has got implications in a negative way if it decides to happen. All right, let's just circle back to the levels here. Nifty once again defended the 40-day exponential moving average, which is 21,987. The support comes in the range of between 21,860 and 21,900. These are levels on the way down. On the upside, I mean, of course, we know what the market can do. And for the Nifty Bank, we closed exactly on the support line. That is 46,495. And the next support comes in at about 45,980. I would say still too early to try and buy the dips. Although things have become a little more orderly as compared to what we had the week before or the week before that, the previous 2 weeks or so. But I would say give it some more time for the market to settle down. I said this on, I think it was Thursday, that on higher levels, they will be sort of selling. Underfunded positions will come in for selling, leveraged positions, etc., would be sold. And it's going to, I mean, that process, that cleansing out process perhaps will take a few more trading sessions at least. The GIFT Nifty is indicating a 67, 68 odd point lower start. Sonia.
Oh, absolutely. I think the market trend is on the downside, right? You can see that the pressure points last week and, of course, the way the market closed by the end of the week as well. The big event to watch this week, as Prashant was talking about, is the US Fed meeting, but I'm not expecting anything out of it. There is no rate cut expectation this time around. The rates would be left unchanged. However, the important bit is, of course, the tone of the US Fed. In case that is hawkish, then that's something that the market will not like. That happens on the 20th, so the street will watch out for that. But in our own markets, the Nifty is down 2% in the last 5 days. And the important level that I'm tracking is the March 15th low of 21,940. On the downside, that is an important level to track. If that gets taken out this week, then perhaps there is more downside in the market. There was selling by domestic institutions as well. DIs sold almost 700 crores in the cash markets on Friday, although FIs bought about 850 crores. A couple of things to watch out for. Towards the end of last week, there was a lot of weakness in the PSU stocks, especially in the oil marketing companies, which fell about 8 to 10% in the last on Friday itself. So I'm watching out for that. The PSU bank index was also under pressure. There was large delivery-based selling as well. So just keep an eye out on some weakness over there. On the flip side, though, the EVs, all the EVs will be in focus, whether it is Tata Motors, M&M, TVS Motor, all the guys who are getting into the EV space in a big way, Bajaj Auto. The new EV policy will, of course, attract global OEMs. It will also attract global investments to come into this space. And the government is now very, very focused on this gradual move towards electrification of vehicles. So Morgan Stanley put out a report where they said that the lower import duty will only be for vehicles which are priced above $35,000. Thus, the policy is pro-domestic players as well. So, that's why they are positive on these names, Tata Motors, M&M, TVS Motor. Jeffrey says that there is definitely now a gradual shift towards electric vehicles. EVs currently form just 5% of the total two-wheeler market, but by 2030, they are expecting it to form 19%. So it will definitely benefit a lot of these listed players like TVS and Bajaj Auto. And the new policy will foster local EV manufacturing, which means that a lot of the auto ancillary guys that are present in this space will continue to see traction. So more on that later, but I think this will continue to be a pocket that the market will focus on. But Rima, looks like it's going to be a sticky start to trade.
Well, it's going to be a sticky start. If you look at the Asian market picture, it's right now Japan, which is doing quite well. The Japanese markets have a gain of about 2%, but the rest of them are not doing too much. But back home, the meltdown in the broader markets that we saw last week. So last week, the mid and the small cap index logged their worst week in 15 months. The small cap index, if you remember, was down 5.5%. The mid cap index had a cut of 4.5%. Now that the results of the stress tests are out, behind that uncertainty which was looming is out of the way, will this get the buyers back to the table? One important level which you guys also spoke about is that Nifty level of 21,909. That's where the 50-day moving average lies for the Nifty. And if you see the intraday lows last week, the Nifty pretty much got to levels of 21,900, and from there it would bounce back. So on 3 occasions, on Wednesday, Thursday, and Friday, the Nifty low was closer to 21,900, which is where the 50-day moving average lies. But as Prashant said, right, this is going to be all about the central bank action, not just from the US Fed. And you spoke about the dot plot, right? Yeah. The dot plot for 2024 indicates we're going to have 3 rate hikes. Right, so 3 rate cuts, right? 3 rate cuts. So is there going to be any change, to that? So I think that's going to be crucial. And as I said, Japan is leading the losses ahead of that Bank of Japan, policy meet later this week.
Yeah. No, absolutely, and we'll kind of sort of look at this in greater detail because in the US, Japan we've not talked about right over the last so many years, except the rally in equity markets and a hike. First since 2007, if it happens. Well, before we start, let me quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. And Rana Gupta will be with us of Manulife Investment Management. He'll be with us. Our research team will get you CNBC-TV18's list of top 10 stocks of the day. At about 8:30, we'll do a fundamental stock check with Prakash Diwan, who will be joining in as well.
All right, let's kick-start the day with some opinion coming through. Mahesh Nandurkar of Jefferies presents 11 stock ideas which are likely to deliver 15 to 25% compounded growth rate returns over the next 5 years. These 11 names are Amber Enterprises, Ambuja Cements, Axis Bank, Bharti, JSW Energy, L&T, Macrotech, Max Healthcare, SBI, TVS Motor and Zomato.
Some money market views. This is B. Prasanna of ICICI Bank, who says that the dollar index strengthened last week post the strong CPI and PPI data in the US. He says this week market expects Fed's dot plot to show higher neutral rates, which can keep the dollar index elevated in the short term. He says the RBI has continued buying dollars to absorb strong equity and debt flows. Prasanna adds, while the strength of the dollar will be dependent on Fed messaging this week, the rupee is expected to trade between 82.5 to 83.1 to the dollar levels this week.
All right, and on the bonds, B. Prasanna says that global yields are reacted higher last week in response to US inflation readings and are likely to stay volatile this week on account of the US Fed and the BOJ meetings. He says India bond yields continue to be range-bound, driven by strong FPI demand, easing liquidity and CPI reading coming along expected lines. He says this week there is significant weekly supply of SDLs and corporate bonds. Prasanna adds the 10-year benchmark bond yield might remain slightly volatile on account of significantly higher corporate and SDL issuances and is likely to trade within a range of 7.05 to 7.15% during the week.
We have lots of stock-specific action to track today, and we'll get to it in just a bit in our special Top 10 segment. We're looking at Coforge, Zydus Life, JSW Energy, SJVN, KSB, Hindustan Aeronautics, Railtel, Amber Enterprises. These are stocks which could be higher today, while LIC and Lupin are the stocks on our radar that are likely to open in the red.
Rana Gupta is with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good morning. Great to have you with us here this Monday morning. Appreciate your time as always. Rana, how are markets looking? Are we entering a bit of a turbulent phase? And specifically, if you can begin by sort of telling us what you think of what if the Bank of Japan increases interest rates? Is that going to be a dampener for risk sentiment around the world?
Hi, good morning. I mean, there might has been expected for a long period of time, so it could happen. But I think to correlate that with the dampener for a risk sentiments across the globe for an extended period of time, I think is a bit of a stretch perhaps, because something so widely expected will not dampen the risk sentiment for a long period of time. I also want to make a broader point that this the narrative around a rate hike and the risk sentiment of the markets is important. I mean, I'm not saying it's not important. It's important for around that rate hike announcement and stuff. But if you take a step back and see that beginning of this year, we were expecting 6 rate cuts by Fed, and right now I think you were also pointing out that we are now expecting only 3. So 3 rate cuts have been priced out. What has been the impact on S&P? Not much. So I think more important to focus on the economic policies of respective policymakers, governments, and the fiscal policy, and what is driving the growth. While the central bankers remain very important, but rate is very important, but we also have to look at their balance sheet size and the liquidity that they've injected over last so many years. So we have to consider all those things, not a rate hike in a standalone factor.
Absolutely, and that's an important point. I mean, markets kind of just shrugged its shoulders, right, as 3 rate cuts have been priced out. But Rana, you would agree that about 80-85% of that S&P performance, right, is 7 stocks this year, just 7 stocks. So it's, yeah. I mean, yeah. Sorry, go on.
No, that's absolutely true. I think that's why I will make 2 points here. First, I made that once rate hike is important, rate hike or cut expectations are important. But I think important to look at the policy and the technology and what's happening in different markets. I think AI is a pretty important theme, and the Magnificent Seven are all linked to that. So they are doing well. I mean, if you go back to the discussions that you must have had, let's say in the beginning of this year, the idea was that these stocks are factoring in too much in the duration is too much. So if the rate hike, if the rate cut expectations are priced out, they miss a correction. Actually, that hasn't happened. And on the point of the US, the Russell, the small and mid cap, of course they have underperformed. But if you look at off late, they're beginning to come back a bit. So I think again, one has to look at a bit bottom up and what's really happening going on is there. I think this Magnificent Seven, the AI is a big theme, and that's why those stocks have responded the way they have.
Okay, that's interesting. But how are you approaching the Indian markets now? Because the run has been very strong, and now there is a sense that there could be a little bit of consolidation, maybe some time correction as well. Is that the best way to look at it? Because we have a big event upon us, which is the election somewhere mid-year too.
That's true. I think election is there, and there could be some. The market is a very fantastic run, so it's. I think it's fine that the market time consolidates for some time, but I also want to focus a bit on what triggered this consolidation. This entire the thing on mid cap and the small cap things. So I think, and that's kind of triggering a bit of consolidation everywhere in those indexes as well as in the Nifty. This consolidation continue for some more time. We don't know. We are not sure the time frame. Probably a month or so. But what we would note is this: the earning growth of NSE, the Nifty is about 15%, and that of the mid cap index is about 20%. So the earning growth remains quite strong. The mid cap index, because so much of flows I understand came in the domestic mutual funds, the mid cap index says the premium went to about 25% to the large cap, and given the last 2 weeks underperformance is already down to 20%. So maybe this Nifty mid cap can probably, there is possible relative basis they can correct another 5%. But any such things in mid cap, or let's say a bit of consolidation in the Nifty itself, will actually encourage a better prospects, because the earning growth rate and what's fundamentally happening within India, which we believe that capex-driven earning growth will be pretty strong beginning second half of this year. I think that remains intact. So our view on that earning growth remains intact. So any time-based correction makes the stock market overall cheaper and more attractive.
No doubt that the correction is healthy, expected also. But in your conversation, are larger investors getting out of the mid and the small cap stocks in India?
See, we cannot speak for other investors, but I can share that the mid cap space, right? Small cap, again, I won't be that much, won't be able to share much. But in the mid cap space, I think there are exciting growth prospects. And in our understanding, mid cap and the small cap together is about 33% of the market, which attracted domestically, I think, 66% of the flows. So that additional flow re-rated the mid cap index valuation at the index level. The valuation premium went to 25%, which is at a high, because the over 10 years the average is about 15%. Now, given what has happened, that premium of 25 is already down to 20, as I just mentioned. So it's possible it's come down to the average 15. But should that happen, we would view that very constructively, because the mid-cap earning growth potential remains at 20%, given the capex and given the government's focus on Make in India. See, any large multinational company, when they make in India, they cannot do everything themselves. The orders have to be given to the ancillary companies. So therefore, I think that kind of makes us think that the earning growth rate will remain strong. So therefore, I think the mid-cap stock, as the valuation kind of corrects a bit, it should only represent a fairly attractive opportunity for someone who is a bit patient and has a 1 to 2 year investment horizon.
Okay, all right, we will leave it at that. Thanks a lot for joining in and giving us your thoughts. Let's slip into a quick break on that note. On the other side, our entire research team will join in to give us the list of top 10 stocks as we begin a brand new day of trade. Stay tuned. Welcome back. Let's welcome our entire team now to tell us about the list of top 10 stocks as we get into a brand new day, a brand new week of trade. Hi guys, good morning to all of you. Reema, you looking at Coforge this morning?
Yes, because on Saturday, the board held a board meeting where they have approved a fundraise of 3,200 crore rupees via a QIP. So this is a fairly large fundraise that the company is doing, 3,200 crore rupees. The stock is down well. It's up 56% in the last 1 year. It's just about 10% away from its 52-week high level. So it's not a stock which is underperformed. It's done well. Now, according to analysts, this fundraise could be for two reasons. Either to pay off debt, because the company does have debt on its books, or it could be for an M&A. Now, the company last June or July had outlined its intention to double its revenues. Its revenues were $1 billion. They want their revenues to go up to $2 billion in the next 5 years, which basically means by FY28. and part of that entails an M&A component. So this fundraise could be perhaps to pare down their debt, which brings down their interest costs, or it could also be because the company is scouting for some acquisition opportunities. But it's a large fundraise, so we're going to be watching Coforge very carefully.
All right, Rima, thanks very much for that. Zydus Life is the next one that we're focused on. Ekta is here with details. Ekta, morning.
Thanks for that. Well, they've received final approval from the US FDA for a drug, finasteride, as well as tadalafil capsules. Now, the reason why Zydus would be in focus is because they've received first approved application, which means that they're eligible for 180-day exclusivity on this particular drug, which is used to treat prostatic conditions. It will be manufactured at the company's Ahmedabad SEZ facility, so it should be positive. Let's see the market size, and but nonetheless, they've got exclusivity for the drug, so it should definitely add on to their US sales.
All right, thanks a lot for that. Well, Vivek is with us to talk about JSW Energy, SJVN and KSB. Vivek, over to you.
Well, good morning. Some interesting news flow there. First up, JSW Energy. So the company's subsidiary, mainly focused on renewable energy, which is called as JSW Neo, has been awarded an additional 500 megawatt of wind park capacity under SECI, which is the nodal agency. So now the cumulative capacity allotted under SECI Tranche 16 for the company stands at 1,000 megawatt. The company's total installed capacity is now at 7.2 gigawatt, of which 1.6 gigawatt is within the wind energy itself. The second stock on the radar is SJVN. SJVN Green Energy, again the renewable energy arm of the company, has received an LOI, the letter of intent, from the Gujarat Discom. Now this is for a 200 megawatt solar power project. The company backed this particular project under the competitive bidding process and the tariff of 2.66 rupees per unit. Lastly, keep an eye out for KSB as well. The company has received a letter of award under the PM Kusum Scheme 3. Now, what actually happened is that the company would be providing close to 2,500 solar water pumping systems, and the total order size for the company is over 63 crores. So, some positive news flow coming in for KSB as well.
Thank you very much for that. But LIC could see a bit of a financial dent as the company has implemented some wage hikes for its employees. Yash joins in with the details. Yash.
Well, Rima, financial bent, as you pointed out, for LIC, but a good news as far as employees of LIC are concerned. What has happened is that the government has approved a 17% wage hike for LIC employees. This is expected to benefit about 1.1 lakh LIC employees. Now, this particular revision of nearly 17% in the wage bill for LIC includes an NPS contribution, which will be increased from 10% to about 14%. This also includes about a one-time gratia bonus payment to LIC pensioners. All put together, about 17% increase in the wage bill for the Life Insurance Corporation of India. Now, the negative, as you spoke about, of course, this puts a pressure of nearly about 4,000 crore as far as LIC's expenses towards employees are concerned.
Okay, Yash, thanks very much for that. We'll keep an eye out on that stock, LIC. Now, more stocks with news flow. Upasana is here with details. Upasana, morning.
Good morning. First up is HAL. Well, the Ministry of Defence has signed a contract for mainly upgrading 25 Dornier aircraft for the Indian Navy at a cost of around 2,890 crores. That's the reason the stock will be in focus today. Next up is RailTel. It has received 352 crore work order from BMC. Next up is Lupin. US FDA has inspected manufacturing facility at Aurangabad from March 6 to March 15th. And the inspection was concluded with the issuance of one observation. Well, that's the reason I expect the stock to open in red today. Next up is Amber Enterprises. The company has incorporated a wholly owned subsidiary named AT Railway Subsystems Private Limited, with the main aim to carry on the business of railway components and subsystems for the rolling stock industry in India and overseas. And company also aims to expand their business in the global markets. So these are the stocks that I would be watching out for.
All right, thanks a lot, Upasana, for that. Well, here's a quick recap of our top stocks. Stocks with positive news flow. There's Coforge, Zydus Lives, JSW Energy, SJVN, KSB, Hindustan Aeronautics, RailTel Corp and Amber Enterprises. While stocks with negative news flow, there's LIC and Lupin. But there are also a lot of brokerages. A very interesting note from UBS, where they've initiated coverage on a lot of these consumption companies like Sapphire, Devyani Foods, etc. Hormuz is here to give us, all of the brokerage notes for the day. Hormuz, good morning.
Morning, Sonia. And as you mentioned, UBS has initiated coverage on 5 food and beverage companies in the country. And starting off with United Breweries, Sapphire Foods and Devyani International. These 3 stocks where UBS has a buy recommendation and is expecting potential upside of anywhere between 14% to 25% over the next 12 months. And the other 2 names being Varun Beverages and Tata Consumer, where it is a neutral rating and is expecting upsides of anywhere between 9 to 11%. Now, UBS is also saying that India's QSR space is set for a multi-decadal growth going forward, and it prefers, within that space, it prefers Sapphire Foods due to the valuation comfort that it offers. Next up is Nomura on Kotak Mahindra Bank, where it had a neutral rating and has a price target of 24.40, and it mentions that deposit mobilization remains a challenge for the bank, as it has been mentioning over the last few quarters. However, the bank does not see any challenges on the loan growth front, is what Nomura is saying, and it is expecting the loan growth for Kotak Bank to be anywhere between 1.75 times to 2x of the nominal GDP growth over the medium term. And lastly, it is also not seeing any asset quality concerns in the unsecured retail portfolio that has been in focus for a lot of these banks. Lastly, Goldman Sachs has come out with a note on the power sector on the CERC's final tariff guidelines for FY25 to 29, where it says that the guidelines are pretty much in line with what the draft paper said, and it also mentions that it continues to like NTPC, as the stock will be a dual beneficiary of the coal capex revival and the renewable energy business at an inflection point. So a positive note there on NTPC from Goldman Sachs. Back to you.
Hormuz, thank you very much for that. Now to the commodity corner. Last week, the rise in crude prices was the talking point. To get an update on what's happening in the world of commodities, Manisha now joins in. Manisha.
Well, thank you so much for that. And the crude oil prices, which gained 3.5% in the previous week to a 4-month highs, have actually come off slightly. And this is ahead of the U.S. Fed meeting this week. It's not just the U.S. Fed, but you also have interested decisions coming in from Japan and the Bank of England and Australia and Switzerland. You also are dealing with inflation data expectations from Japan, Canada, and the Bank of England. So markets are looking at a whole host of data that is expected in this week. Add to that the Chinese industrial production, retail sales, fixed asset investments. All of those numbers also come into this week itself. Ahead of that, we have the dollar index trading at a 1-week highs, and some pressure is what you are looking at in sense of precious metals and industrial metals as well. So gold is also seen as slightly come off from the prices. The bets of June rate cut have declined to 58% from a 74% earlier, and that really seems to be bothering in. But amidst all of this, if there is something that is still trading on the positive, it's clearly the copper prices at an 11-month highs right now in the international market. And with the kind of hot money that seems to be chasing this metal, there are higher forecasts now coming in for this one.
All right, Manisha, thanks very much for that. We'll take a quick commercial break here. We are going to come back in just a bit from now and start talking about individual stocks. We'll have Prakash Devan to help us with what his views are on many of these names in just a bit from now. Stay with us.
Welcome back. It's the start of a brand new week. The GIFT Nifty is suggesting a lower start, a breach of 22,000 on the Nifty, and we're coming off on the heels of a very tough week. Last week, the Nifty and the sensex were down 2%. The mid and the small cap universe, the mid cap indices were down close to about 5%. The big pivotal event to watch will be the FOMC meet. It starts tomorrow, but the Indian markets will only react on Thursday morning. It's a 2-day event on 19th and 20th. And the question is, after the persistently high inflation out of the United States, last week we've got the core wholesale inflation. Will the Fed delay its rate cuts? But to talk more about the Indian markets and stocks, Prakash Devan is now with us on the show. Prakash, one of the big stocks to watch will be LIC, where they have effected a wage hike of about 16 to 17%, and there is a bit of a retrospective impact. How will shareholders view this? The impact, the financial balance sheet impact it will have on LIC.
Good morning, Rima. So I think there will, of course, be some sort of a negative impact, not just sentimentally, but also financially. But remember, this is something which is not out of the blue. It's just that the quantum and timing was uncertain, and that's kind of come through. And essentially, what this does is it kind of takes this possibility and the overhang of this possibility out of the way. So I think once it finds a bottom, once it finds a little bit of a consolidated zone that it kind of moves into, it's then that people will start penciling in the kind of robust growth that LIC made. And remember, LIC has a lot of other moving parts. It's got this whole money coming in from some of the claims, some of the refunds. It also has a lot of the yield-based improvement in its debt portfolio. So that's definitely likely to have positive impact, which will set off a little bit of this negativity. But then the big question there is valuations for a lot of the PSUs that it sits on within its portfolio. Those have come off. So, from that perspective, also the treasury income is going to be a bit subdued coming in this March end quarter. So all in all, it'll probably, get you into a zone where you could start looking at adding to it because, the elevated levels that you saw in the month of January, those probably seemed a bit unreal to sustain. And that's exactly what the market is proven. So at lower levels, I'm sure there will be a lot of value seeking that will lead its way to money coming into LIC. But you'll have to give it another couple of weeks for all of that to happen, or possibly first half of April is the best time to look at getting into it. But at sub 900 levels, it gets you into that very favorable risk-reward situation.
Okay, the other space that is very hot right now, Prakash, is EVs, right? The government is giving out some policy incentives. They're clearly, riding on this China plus one theme, so looking to make India a manufacturing hub for global EVs. There are two-part question to this. One, would you be positive on a lot of the auto ancillaries that supply to the EV ecosystem? And if yes, which ones would they be? And two, would you be concerned about the current incumbents? Or do you think that given how expensive, the likes of Tesla, etc., until they don't start manufacturing in India, it's not too much of a concern? Your thoughts?
Yeah, absolutely, Sonia. So let me take the second one first because it's easier. The impact on OEMs in India is going to be minuscule. People might kind of read a bit too much into saying Tata Motors is going to face a huge competition, but it's actually not the case because Tata Motors has a price point, a range of price point, which is way, way different than that $35,000 that we are talking about, $3,500 that we are talking. Remember one thing, in India, the cars sold in the 25 lakh INR plus zone, that segment is just about under 3%. So it's not that, there's a huge market that's going to get disrupted with this. This seems to be a very clear paving the way for Tesla or maybe a VinFast or somebody, of that caliber and scale to enter into the Indian markets. While the government had promised this would happen, they didn't want the disruption to impact its fledgling EV market itself. And they've done a very good balancing act. Specifically, if you look at the auto ancillaries, which have the scale and the quality to be able to supply to some of these larger premium EV players, you'll probably have a Sona Comstar. You'll probably have, to a large extent, the Motherson Sumi Group. Which company out of the two you can choose, but I think Samvardhana, which is more global in its in experience and exposure, will probably be able to participate, and some of the Minda Group companies as well. So there are auto ancillaries which have the wherewithal to do it. Now, when that happens, don't read too much into it that this is going to be immediate because this will take time. The setup will, whether new OEMs will take time. The backward integration will start. The vendorization will take time. So it's still about a year away before all of that happens. But yeah, these are the names that you could probably look at going forward in terms of being a bit more positive.
Prakash, hi, morning. OMC sold off, right, aggressively on Friday. Although there was some recovery, 3-4% recovery from the lows. HP, of course, took the biggest knock. What's the view there now?
Good morning, Prashant. I'm very positive on that. Even that day I mentioned this is giving you a very good entry point for an overreaction to a belated, price cut on retail outlet level prices. So, it is something where, and you have to, of course, accept the fact that till probably first half of June, till the results are out of this election season, you will not see any kind of ability to move prices back. But my sense is this is something which is not going to impact some of the players which have a decent balance between marketing and refining. And by virtue of that, IOC stands out as a winner. I think HP would probably be more impacted because it has a significant reliance on marketing revenue in its overall contribution on the P&L. But IOC, look at where it's traded, Prashant. It's still on a trailing basis, it's still trading at less than 5p. So you're not overpaying for anything in spite of these short-term blips once in a while. But the long-term story is that the kind of asset base creation that they have been responsible for in the last 5-7 years is something which will pay them for the next 5-7 years very easily. So they will keep on reaping the benefits of that. I think it was a lovely the opportunity to buy. I'm sure a lot of the domestic institutions who have to allocate some money to this sector and to PSUs, it's a great combination, right? And you're buying value. In this market, if you can get value and not overpay for growth, it's the ideal sweet spot of thought. So I would believe it's a great entry level for that, and specifically for IOC.
Prakash, stay with us. We've got more questions coming your way. We have to take a quick commercial break here, so we'll do that. We are back on the other side. Prakash is with us, and we'll get you some technical trading ideas as well. Stay with us. Okay, welcome back. There's 15 minutes to go for the pre-open session. Anuj is here with what he's making of the trade setup this morning. Anuj, good morning.
Good morning, Prashant. And it's a make or break week for us. For starters, it's a full week. But the good news is next week you have 2 holidays. So that is going to be a really good one. But, let me just go through why I'm saying it's a make or break week, because the market has been making some crucial lows. The highs have been coming off significantly, but the low are also coming up little bit, but look at the table. 22,446 became 22,204, then 22,120. That's in terms of highs, significantly lower than the previous highs. But the lows from 21,905 to 21,917 to 21,931. So the short point is that 21,900 to 930 is holding. Even in the even in the face of bad news. So that's good news. Now, in terms of what the markets have done this month, the Nifty is up 0.2%, mid cap is down 3%, small cap is down 7%. But look at it from the highs. The Nifty is down only 2%, the small cap index is down 11%. What that means is that in certain cases, portfolios would be down 20 to 40%, depending on what kind of stocks you're holding. The other interesting table is what's happening with the FI positioning. We had started to reach a stage where we were almost approaching the net neutral zone, 43% shorts. We're back down to 38% short. And in terms of contracts, we're almost double of what we were at the start of last week, from 30,000 to almost 60,000. The put call ratio is at 0.99. Now, over the last 2 or 3 days, we've seen it fall to 0.65 also. So let's see if there's some more selling which happens today. In terms of levels to watch on the Nifty, I'm watching out for 2 support zones. First is 21,905 to 21,931, as I highlighted in the table, the last 3 days low. And the 50-day exponential moving average is at 21,812. That's the level which normally markets hold in an uptrend. On the upside, the resistance comes in at 22,120 to 22,151, Friday's high and 20-day exponential moving average. And the bigger resistance is 22,200, the 10-day exponential moving average, and going by the option zone. The bank Nifty is relatively stronger than the Nifty and the mid caps. It's actually still up about 1% for this month. Here the support lies in at 46,300 to 46,450, which is Friday's low and the 50-day exponential moving average, and then 46,100 to 46,200, the option zone and 100-day exponential moving average. And of course, you want to keep an eye on HDFC Bank, because that's showing some signs, again, some signs only of bottom formation. But let's see if that holds out this week or not.
Thank you very much for that interesting setup. Mitesh Thakkar, Kush Bora are now with us. Gentlemen, morning. Mitesh, starting off with you, how would you position yourself for trade today?
Good morning. So I think Anuj made a very important point highlighting the levels of 21,930 thereabouts. I think we have been maintaining that the first target of the downside would be 21,950, 930. And repeatedly, as he also mentioned, I think the Nifty has been bouncing back from those levels. And I think today with the the GIFT Nifty about 70, 75 points lower, we might open again in that range. So very important to see if we see a follow through. If not, then I think, what we'll do is we'll be slightly more aggressive in taking profits on the short positions. But a break of 21,900 would invite fresh shorts both on the on both the indices as well as stocks. So I think that's the way we'll approach the market. In case we bounce back from here, I think it will be a market which will chop around between 21,950 to about 22,250. But the overall structural view for me is slightly on the negative side. So then I will use bounces to get into more of short positions.
Okay, Kush Bora is also joining in. Kush, are you getting a sense that this market could see a further sell-off? Because it has been very volatile for the last few days. And if yes, what should the approach be for today?
Hi, Sonia. First of all, very good morning. Well, I think there's a strong support zone coming in at 21,800 to the 22,000 zone. So I think, most of the froth that was there in the market is, being taken out. I will actually look for buying opportunities at lower levels, perhaps closer to 21,800, 21,900 kind of zones. The only thing is that I'm not expecting a V-shape kind of a recovery in the coming days and like a sharp rebound. So I think, someone who's a little patient, even today, if you get some kind of a dip towards the 21,900 mark, maybe slightly below it, it's not a bad idea to add some tactical long positions. At these levels, the risk reward ratio becomes extremely favorable. Bank Nifty for the 5 days has been making a lower low formation. So here too, the risk reward ratio becomes favorable. It's just that the entry point is getting a little difficult to pinpoint. On both the indices, from a positional standpoint, I'm looking at buy on dips kind of a strategy because the support zones are stronger and the indices are approaching those. But as I said, it's just that I'm not expecting a V-shape kind of a recovery and a quick buck that everyone's used to for the last about 18 to 24 months.
What about individual stocks? Let's get straight to it then. Mitesh, what are you looking at this morning?
I have a mix of buys and sells, slightly more biased towards the sell side trades. I have a sell on M&M. It had a big breakdown on Friday, could possibly decline to about levels of 1740. So sell here with a stop at 1830. A sell on Bata with a stop at 1405, where I would look for targets of around 1355. A sell on Crompton with a stop at 281 for a short-term target of 263. And the buy call comes in on LTTS, which is Larsen and Toubro Technology Services, which I would recommend buying with a stop at 5320 for targets around or in excess of 5600.
Right. Gentlemen, morning. Kush, what about you? What are your trades?
Two trades, both of them on the buy side. Geo Financial continues to surprise on the upside. That remains a buy. The dip that we saw recently, that also turned out to be a buying opportunity, and the stock could head higher. So for Geo Financial Services, a buy with targets of 370 and 385. A positional stop loss comes in at 330. Also, Bharti is looking good for the last couple of sessions. It was consolidating with a positive bias. Friday, we saw a positive up move. So 1250, 1280 are the near-term targets, and 1190 is where I could place my stop loss.
Okay, all right, gentlemen, we'll leave it there for now, but we'll come back in a bit with more on markets. Chandan Tapari is with us, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. Good to have you here as always. New week, maybe a little bit of calm is what we need after all of that up and down and big moves. Smaller, quieter markets, preferable. What's the strategy and what's the view from here, Chandan?
Good morning, Prashant. Thanks for having me. So yes, in the last week, we witnessed some profit booking mainly in mid-cap, small cap. But the good part is that selective IT and FMCG stocks were holding well. So looking at the Nifty, now key support comes at 21,830, which is 50% retracement of the entire uptick and also 50-day exponential moving average. However, the good part is that in last 3 trading sessions, we formed an inside bar, which indicate that even after the selling, the market range was getting narrow and trading price were intact. So as of now, the key hurdle will be at 22,222 and support will be at 21,830. So I need a decisive range breakout to commence the next leg of rally. If you ask me the aggressive stance, then let it surpass 22,222, then I'll look for the next leg of rally. While hold below 21,830 will open the downside of 300 to 500 points. The good part is that even after the market decline, India VIX was slightly down. It was not moving upwards, which is giving a sign that somehow we will find some stability at lower levels or stock specific action will be there in the market. So keep the key number 21,830 and 22,222 on radar to get a decisive leg of rally in the market. Now looking at the Bank Nifty index, in this series, we have seen huge open interest that was on the long side. However, unwinding was not there, but it witnessed some profit booking and now it's near its 50-day exponential moving average. From last 5 days, it is making lower highs, lower lows. But on last trading session, it formed a doji sort of candle. So again, mixed skew, major support at 46,000, hurdle at 47,250. So getting a range bound bias, but yes, upside is likely to be kept due to the cold writing and the price structure. Now looking at the stock wise, first trade is buy on Bharti Airtel. This is one of the strongest counter in this market sentiment. Resilience at the time of market decline, which clearly indicates outperform nature. We have seen built up of long positions, even rollover from previous to current series were better with put writing activity. So expecting a fresh rally towards 1275, one can buy Bharti Airtel with a stop loss of 1195. Second trading idea, that is buy on persistent system. We have positive on the selective IT name, including TCS, Persistent, LTTS. So here, Persistent is making positive price pattern, negating the lower top, lower bottom of last 3-4 weeks, holding the gains, formed a bullish candle. So recommending to buy with support of 80 to 50, and this stock can head towards 8600 zone. Last trading idea, that is sell on RBL Bank. We have negative on selective banking counter, which are forming the lower top, lower bottom, and recovery is not visible. Shorts are clearly seen in all these names. So RBL Bank looks weak. One can sell with support. One can sell with a stop loss of 230, and here we are expecting a downside move to us 215 to 210 in the counter.
Okay, gentlemen, thank you very much for that. Prakash is still with us. Prakash, any thoughts on Coforge? It's been one of the better performing mid-cap stocks. And now they've gone ahead and taken approval for a very large fundraise. 3,200 crore is about 8% of the company's market capitalization. So the sense is that they're gearing up for a large acquisition. Do you like Coforge in the mid-cap IT basket?
So, Rima, there's definitely a lot of stuff happening within some of these largest mid-cap IT names who are trying to see this opportunity for inorganic growth where others are floundering. The people who don't have scale or who are dependent on some of the conventional revenue streams and don't have new age stuff like AI and ML backing it up. So, Coforge has successfully done a lot of restructuring in itself for the last 4-5 years and created value. I think they know the game. They will definitely would have identified certain targets for that. Now, it all depends on what price they end up paying and what's the kind of contribution the new acquisitions will make, how soon it makes, because timing today is more important for IT names to kind of make that comeback, and your return ratios will have to really inch up very quickly. So I would wait for that, not jump at it. But yes, it's a great step in the right direction. But within that space, Rima, I just want to leave you with this thought. There's one company which continues to grow globally. Of course, the parent is also growing in different areas, but the rub-off effect is that they don't need capital, but they can continue to march ahead in terms of building a book which is very, very formidable, and that's OFSS. We saw the numbers last quarter. I think that was a turning point. You could expect those kind of numbers to continue to happen. So OFSS is something where this whole comeback in terms of cleansing of the fintech platforms and the sanitization of processes, that is something where OFSS will deliver a very stupendous kind of product mix. So I'm quite positive that, of course, it's run up quite a bit. We used to see it at 4,500 zones last year, but then everything else which is promising also has. But there's much more to go going forward from this company.
Okay, Prakash, stay on. We'll come back to you. Let's take a short break. On the other side, we'll come back with the pre-opening rates. We'll also have Mangesh Bhadang of Centrum Broking to put focus on the cement sector. Do stay tuned in for that. Welcome back. You're still watching Open Exchange live from the CNBC-TV18 Motilal Oswal studio. We're going to get some rates in just a while, about 3-4 minutes. In the meantime, let's also talk about some momentumizers of the day. Rima has one for us. Rima, what are you looking at?
I'm looking at Solar Industries because on Friday, the stock was up 8.7%. In fact, it rallied even on Thursday. So between Thursday and Friday, the stock moved up 20%. Now, earlier last week, the company won a large export order worth 455 crore rupees, which was going to be executed in the next 2 years. And this was the company's second major defense export order in the current quarter itself. So the stock got very excited. And according to ICICI Securities, revenues from the defense sector will contribute about 18 to 20% of their overall revenues by FY25. Now, the stock is down well. As I said, in the last 2 days itself, it was up 20%. But this month, at a time when things have been challenging for the broader markets, mid-caps, Solar Industries is up 32% in the month of March. And in the last 12 months, it's up 126%. And the stock is very close to its 52-week high of 1.5%. Volumes too on Friday were significantly higher compared to what we typically see. So the total traded volumes were 4x of the 1-month average, and there was a sizable pickup in the delivery volumes too. Prakash, is Solar Industries a stock that you've ever looked at?
Oh, absolutely. In awe. Always looked at it in awe. Look at where it has been all these years. It's been a multi-bagger in the true sense, and the long wait that it made to made investors do was primarily because they expanded a lot of capacity in anticipation of the defense play coming in, not just depending on infrastructure in terms of their explosive product sales. And the defense thing took some time, but when it did, it's been a juggernaut which kind of has just started moving. In fact, if you listen to the calls, if you listen to the commentary of the management, the order book, not just the order book, the potential that they have as market leaders in this space, supplying to so many of these, new developments that are happening on the weaponry side in defense. Makes you believe that they could probably do a revenue which is about 3.5x in the next few years, couple of years, maybe 3 years. So if you have the patience and if you don't get worried about the kind of valuation that it attracts, which it always will, it's definitely something which can be very rewarding. But people do get a little bit put off with the rich valuations all the time. It has been trading, even in bad days. So even on bad days, you probably don't get it cheap. But if you were to ever build it into your portfolio, I think it will pay off irrespective of what levels do you get it.
Prakash, just a couple of more names, right, that I wanted to view on. One is Coal India. So we saw a bit of a sharp cut. And I read something interesting and this is, of course, perhaps something will play out over the next couple of months. So LNG, natural gas, basically, there is a big glut which is expected starting the next couple of months. And since, coal and sort of gas are, in a way, interchangeable sources of power, there is a strong correlation, apparently, with where coal prices also head. Any thoughts, Coal India from here? And the other one is Bajaj Finance. Stocks underperformed quite a bit on Friday, saw some signs of life, ended about 2.5% higher in a down market. Just your thoughts.
So, Prashant, I think Coal India very clearly, it's the market was looking at some sort of a trigger to pare down the kind of valuation it would start attracting. If things didn't keep moving in the same linear fashion that they have for the last, let's say, 2 or 3 quarters. But you need to understand that Coal India is trying to fill a huge yawning gap that we have in our energy security. It's not something, especially on the conventional side. While solar and wind and all is going to take fairly long to kind of, start percolating down on the utility level, it's going to be dependence on this. And when we correlate or, juxtapose that with the fact that the Indian economy is likely to grow on all the conventional areas of infrastructure, capital goods, defense, railways, there is no reason why energy will be an area which will have any sort of a oversupply, irrespective of the potential glut that we are talking about. Now, look at that glut. That could get absorbed by so many other businesses, so many, whether it's city gas distribution, which Coal India doesn't supply to, or it could be fertilizer companies, which again, Coal India has got nothing to do with. So with cement, fertilizer, CGD, all of that, I'm not worried about that glut. In fact, it's always good for our economy. And we are building up the infrastructure to absorb that. So Coal India will continue to march ahead, given its reserves, given its potential to increase output at this formidable rate. It might consolidate, given the fact that it's run up from 230 to all the way, almost kind of doubled, close to doubling in less than a year. So that is going to have some sort of a pause. But I don't think it's something which you could write off very easily. And of course, on Bajaj Finance, the commentary is very clear. They've tried setting expectations in line, and they've talked about a little bit of a compression on the NIMs, which is evident from whatever we see. And once the RBI, the rap on the knuckles that they got is out of the way, you could probably see some sort of a respite coming. But till then, given the fact that the competitive intensity is growing so significantly, I would believe it will probably remain under some sort of a pressure. And it has to continue to perform at top-notch, parameters to be able to justify the valuation. And that's the problem with Bajaj Finance. Any slippage in that, and it kind of gets beaten down. But I would wait for the RBI thing to get sorted, and of course numbers in March kind of giving some sort of an indication that things could not be as bad as they've been for other NBFCs.
All right, got it. Prakash, just stay on, just getting in some rates. Looks like it's not going to be the best start. The Nifty is down about 20 odd points or so. In terms of individual stocks, remember a lot of the PSU stocks fell last week. So keep an eye out on them. The banks look like they could be under a tad bit of pressure today. HDFC, ICICI, SBI all down about 0.5%. We'll wait by for these rates to adjust. In the meantime, another sector that has been under a little bit of pressure is cement. Mangesh Bhadang, the Senior Vice President Research at Centrum Broking, joins us now to talk about the cement sector and to discuss pricing trends as well. Prices, in fact, declined for the 4th consecutive month in February, and we've been hearing ad nauseum from the sector about a weakening of demand. Mangesh, hi, thanks for joining in. Just tell us first, how is the demand situation? Because now we're getting into election season. What generally happens around this time? And do you see further weakening of demand in the quarters to come?
Hi, good morning, everyone. So demand definitely has been weakening for the past few months. In fact, first half of this year, FY24 for cement has been very good with almost 16% growth. And second half, we started third quarter with only 5.6% growth, and we believe that 4Q would probably average at around only 3 to 4% growth. So this is just because of the elections. I think, the government's infra spending has slowed down, and that has resulted in some weakening in the overall demand side. In terms of expectations, we believe that even the first half of FY25 could also be weak because we'll have elections in the first quarter and monsoon in the second.
Okay. In the note, you also go on to say that companies have not been able to meet their internal volume targets because of the softness of in demand, despite offering discounts. So how is this impacting, what the companies were earlier expecting the first half to be and what they will end up with? What's the extent of a volume decline?
So volume is still in positive territory in terms of growth. So post the state elections, which happened somewhere around October, November, there was widespread expectation that January to March demand should be good because pre-election spending should be there from the government side. But that has not happened. And generally, March is the month wherein we see a lot of volume push from the companies. But given the demand weakness and weak pricing, we have seen that even that push may not come through in this month. In terms of percentage, it's not down on a YY basis, but compared to expectation, it is low.
Mahesh, in terms of what you like in the space, right? It's a very scattered sector, and specific dynamics in some parts may be different than others, and that will obviously have an influence on picks. So what's looking attractive to you right now?
In terms of regions, we believe that South and East are the worst affected when it comes to both demand as well as pricing. So despite the correction in the stock, I think there would still be some more time correction in the stocks like Dalmia and Ramco, who have a very high exposure to these regions. And on the positive side, we like Ultratech as well as Birla Corp, wherein we feel that Ultratech for its size and Birla Corp for certain incentives that they are going to accrue this quarter. The numbers will not be as bad as for the rest. So we'll probably go with these two names now.
Ultratech and Birla Corp, you said, right?
Birla Corp.
Okay. You also spoke about how, because pricing has been weak, you've not seen any major volume growth in the month of March. Is that the expectation as well, that going forward, volume growth will continue to be either in low single digit or barely any volume growth, at least for the next couple of quarters? What is your own volume growth estimate?
Yeah, so see, this is the third year wherein volumes for cement has been very good. So if you take out the average, 9 to 10% growth has been there over the past 3 years. I think FY25 first half is going to be soft because, as I said, because of elections and monsoon. And generally at the post-elections, it takes time for the government machinery to come back in full force and start delivering on all the capex and spending. So 25 could be softer with only 4 to 5% growth is what we are building in right now.
Is this common, Mahesh, that during the election, in the run-up to the election, that demand is a bit subdued? I thought typically we would have this pre-election rural infrastructure spending.
No, so if you look at the data for demand growth against elections, there is no direct correlation. So we have seen in the past that there have been years wherein demand has been very good. So the way we look at it is, in historically, whenever running into the election, whenever the demand has been good, we have seen some slowdown. And in the past, whenever we have seen that, the demand was extremely low before the election, then generally it tends to pick up post it. So as I said, we have had a very good 3 years of demand till now, and that's why at least first half we are expecting that some softness will be there in demand. And this is actually evident from the channel checks that we have done, and most of the dealers are suggesting that even on the rural as well as IHB side, the demand is soft. And there are certain states like Bihar, Jharkhand, West Bengal, then Kerala as well as Telangana, wherein they have mentioned that the demand has actually contracted on YOY basis.
All right, we'll leave it at that. Thanks a lot for joining in and helping us with the cement situation. So demand is under pressure. However, there are some upgrades that have also come in on the cement space. City has upgraded some of the cement stocks as well. Shree Cement, yes. And as Mangesh was telling us, he likes Ultratech Cement and Birla Corp. But let's get back to the markets now and get you some big calls for the day. Looks like we're going to settle a little under the 22,000 mark on the Nifty. The mid-cap index could be flat. Mitesh is joining in. Mitesh, what's the big call at 9:10?
I'll go with the sell on M&M with a stop at 1830 for targets of 1740.
Okay, all right. Mitesh, thanks very much for that. Coming back to you for more. But standout brokerage, what's on Nimesh's list this morning? Nimesh, good morning.
Hi, morning Prashant. Today's standout is on Page Industries. UBS has today initiated coverage on the stock with a buy rating and a target price of 44,000. They believe the strong brand distribution and brand recall to drive growth for Page going forward. In fact, they expect double-digit revenue growth in the medium term, driven by a few factors, which includes strong distribution network and brand recall, in-house production, which is more than 70% of their top line, strict working capital management, as well as strong balance sheet. So UBS is estimating a revenue and EBITDA CAGR of 10.5% and 16% between FY23 and FY26. And they expect EBITDA margins to improve 230 basis points in FY26. So they expect strong growth led by margins as well, and hence initiated coverage on the stock with a buy rating and a target price of 44,000 on Page Industries.
Well, that's a sharp increase in the fair value. 44,000 compares with the current market price of 35,000. So that's a decent amount of upside. Coforge is a stock you should watch today. In pre-open, it's down 1%. Perhaps the market is fearing a very large equity dilution. On Saturday, the board has gone ahead and taken approval to raise funds to the tune of 3,200 crore via a QIP. It's a large amount, about 8% of the company's market capitalization, so there will be substantial dilution. The fundraise could be to bring down their debt and or an M&A. Remember, the company has outlined its plan to double its revenues in 5 years. So from FY23 revenues of $1 billion, they want the revenues to hit $2 billion by FY28. And according to their blueprint of achieving this vision, $150 million of that incremental $1 billion of revenue will come in via an M&A. Now, Phillip Capital says that assuming this funds, the funds that they're raising right now, they use it to pare down the entire debt, they will still be left with 2,600 crore of cash, which they will use for an M&A. They're just trying to find out what could be the potential size of the acquired company. So they've done some, price to sales multiple of 2.5 times, and they're saying the potential revenue addition from an acquisition could be about 1,000 crore rupees or $125 million, which is 11% of Coforge's FY24 revenue. And in the past, the management has said that they will look at EBITDA margin accretive businesses for acquisition. Phillip Capital is bullish on Coforge. They have a buy rating, target price 7,240, because they believe the stock will be a strong earnings compounder and organic revenue growth. Organic is X of acquisition, will still be in the leaders quadrant for Coforge. But the stock right now is down 1%. But auto ancillaries.
Yes, looking for auto ancillaries as well this morning, because Kotak has upgraded some of the auto ancillary stocks. Very interesting there. They've upgraded Uno Minda, they've upgraded CIE Automotive India and Varroc Engineering, and all these stocks have been upgraded to an add from a sell. Now, they talk about very steady demand in the two-wheeler segment specifically. there are two things happening. One is premiumization trend is growing. The second is the government, as we know, is very keen on electrification of vehicles. There's a new EV policy that has been put into place as well. The government wants to make India an EV hub, a manufacturing hub for global OEMs, and this will definitely benefit the auto ancillary stocks. They talk about how Uno Minda will continue to outperform the industry given its market leadership in various segments. Uno Minda also has a very strong track record, and for CI Automotive and Varroc Engineering, it is attractive valuations that will, benefit some of these companies. So very interesting. On one hand, it's a pure win-win for these auto ancillary names. On the other hand, one would feel that maybe the incumbent players could get hit because global OEMs are coming. But that too is not the case because, the Teslas of the world are still very expensive unless they don't manufacture in India.
Absolutely. I was reading, I think a Kotak note on that EV thing, saying that the cheapest Tesla on road in India would be about 42 lakhs, 43 lakhs, the lowest, the base. And of course, I mean, here the segment which is doing well are not
15 lakh
are SUVs. Yeah. So the car buying.
Unless they don't come down to 20 lakhs or even further down, then it's not a stiff competition.
Yes. The other stock to watch out, perhaps, because we're talking about Tesla. I remember Sona Comstar, right, used to be sort of suppliers to, never obviously said publicly, but I think is long believed that they are suppliers to Tesla. So maybe that's another auto ancillary name on the back of, the EV bit which has come through. Well, let's just take a quick look at what we have on the open. It's a slightly lower start, 40 points down on the Nifty, 20 down. So it's a absolutely flattish, slightly lower kind of start as expected. So about 0.25% down. Bank Nifty, by the way, is down about a quarter. Similar, 128, 130 odd points lower is what we have on the Nifty Bank. 46,460 on the Nifty Bank. Mid-cap index is down about a quarter. And we'll have a quick look at the small cap index as well, which is where, of course, the problem was. But on Friday, the small cap index did very well and bounced nicely. We're down about 1/3% on the Nifty small cap index as well. But Sonia's got more rates. Sonia.
Well, thanks a lot for that. I'll take it straight to individual stocks because there's plenty of action there. I'm going to start with HAL because Hindustan Aeronautics has bagged a big order worth almost 2,900 crores from the Defence Ministry to upgrade 25 Dornier aircrafts. So Hindustan Aeronautics up 1.5%. Coforge, right? Rima was telling us how the board has approved fundraising of up to 3,200 crores via the QIP route. The stock is down about 3% right now. RVNL has got an LOA for a project worth about 350 crores from the Maharashtra Metro Rail Corp. In fact, talking about railway stocks, you have RailTel, which has bagged an order worth 130 crores in Bihar and 352 crores from the BMC. You have a lot of these food and beverage stocks which could be in focus. Hormuz was telling us a while back that UBS has initiated coverage on names like Sapphire Foods and Devyani International. Sapphire Foods, they have a target price of 1,800 and Devyani International, they have a target price of 190. So big upsides to the current market price over there. Apart from that, Zydus Life in focus as they've got a final approval from the US FDA for a few drugs. We're also looking at the auto ancillary names. So there's Uno Minda, CI Automotive, Varroc Engineering. All three have got Kotak upgrades. To an ad from a sell. Uno Minda up in the green, CI Automotive flat, Varroc Engineering is the other one that we're looking at this morning. Then you have OMCs, right? Last week was pretty brutal for the oil marketing companies. BPCL, HPCL, IOC all fell anywhere between 7 to 9%. But this morning, there's no great recovery, but some of them are just about stabilizing with a flat move. IOC is up almost about 0.8%. Largely for the market, you'd have to say it is a slightly weak start. The Nifty is down about 40 odd points. The pressure seeping in here actually. The Nifty Bank, which is down about 100 odd points. Back to you guys.
Okay, some more stocks which make it on the list today. It's Zomato. Zomato was up nearly 5% as Zepto is trying out a platform fee of 5%. So that's raised hope that maybe Zomato could do that for its instant delivery business. So Zomato continues with its gains. On Friday, the stock was up nearly 5% and it's added on another 1%. Ircon in the entire railway pack is also higher in trade. I think it's a 3 to 4% gain on Ircon after the company gets an LOA for a construction project which is worth 631 crore rupees. The stock is moving up in trade. In the auto ancillary, Sona BLW is actually higher in trade and that's up nearly 1.9%. Page Industries, which Nimesh just highlighted as the standout brokerage stock of the day, has opened up with strength and it's a gain of nearly 1.5%. Coforge is now extending the fall on the way down. Coforge is down 2.7%. So the street fears that equity dilution. And in that, note on consumer durables where QSRs, they spoke about Sapphire, etc., United Brewery and Tata Consumer also made it to that list, but those stocks are a bit subdued. United Breweries is down nearly 2.2%.
Absolutely. And, market breadth is positive. 1,260 stocks are higher, and you've got about 750 stocks which are lower. So that's the overall broader market picture. The Nifty is down 70 points, though. But as we were saying in the morning, some semblance of order back in the broader market, in the mid and small cap part of the market, which is where the trouble really was. Just a few other names before we sort of go across to our market master of the day. Torrent Power is up on huge volumes, actually. 5% on Torrent Power. Stocks 1,200 plus. Mahindra & Mahindra had sold off in the last half an hour, 45 minutes of trade on Friday. That's making a sharp comeback. It's up. It's the second largest volume-led gainer, 3% on Mahindra & Mahindra. There is Amber, which is up 4%, and it's got large volumes for this point in the day. PCBL is up about 5%, 257. I think PCBL, if I'm not mistaken, was on the chatter list on Friday. Loda, Macrotech is up about 3%. Stocks at about 1,035. So that's looking up. Shipping Corporation, 5%. Stocks at about 207. So these are all names which are coming up and showing volumes as well, but yet to pick up, right? I mean, it's not a broad gush of volumes across the board. It's limited if you want to look at gains along with, volumes as well. Tata Investment Corp is down another 5%. It's had a absolutely stellar rally all of 2024 and even before that, actually. Actually, the Adani Group stocks are down. Enterprises, Ports, and Adani Total. Ambuja Cements is also down a little bit. So Adani Energy Solutions is another one which is down about 2% or so. So there is a little bit of selling which is emerging in these names. HDFC AMC is down 2%. Stocks at about 37.41. And I think we already mentioned UBL, which is United Breweries, down about 2.25% or so. Sonia.
I just want to mention one thing. The biggest Nifty gainer now is M&M. If you remember, on Friday, a lot of these stocks fell after that EV policy came out. Now the street has understood that this is not a negative for OEMs. And it's the EV policy is unlikely to impact the domestic players, whether it's Tata Motors, whether it's M&M, because they operate at much lower price points, right? And there is no competition at the moment in that. Even in future, their EVs will be eligible for PLI benefits of up to 15%. So they will be cost competitive. So the minute the street realized that, there was this buying that came in on these stocks, and hence this is the biggest gainer right now.
Absolutely. I was talking about Sona Comstar, right? That's up about 2.5% as well. So 655, 656. But I mean, that's just rub off at the margin based on what people are making in the news flow. Larger global OEMs perhaps coming here, investing, and then, of course, getting their cars at that lower import duty as well. But let's go across to Kenneth Andrade. He's Chief Investment Officer at Old Bridge Mutual Fund. Kenneth, good morning. Great to have you back on the program. It's a pleasure, as always. Give us an update to begin with, Kenneth. The last time we spoke, you just got an approval and you were launching those schemes, etc. What's the latest? What's been the response like, and what have you been doing? Interesting markets also to raise money and sit on money.
Okay, we got since the last time, Prashant, we've got off the ground. We raised a small pool of capital that is there, and it's been our first month of investing and first month of full investment in the portfolio. We've launched a focus fund, like you've known, and we've got about 23 names in our portfolio. It's a suite of products and as per a suite of companies, and it's very focused on to what we think will emerge over the next year or two. Okay, chief amongst them is our focus on the pharmaceutical business, and these are largely in the generic spaces of outside. There's a reasonable opportunity in the India infrastructure space, and also in the energy space in India. So all of this put together, along with manufacturing, which is reasonably large, would be about 50-60% of our portfolio. So that's the update, which is there as of now.
First full month of investing, 23 stocks in the portfolio,
That's
and
right.
50-60% of the portfolio made up of India generic pharma companies, right? Supplying to US, etc.
That's right.
Okay, infrastructure and manufacturing were some of the others
Yes.
that you mentioned. Okay, got that. How much the market is corrected. And by the way, out of these 23, this is all large caps, Kenneth? Are they sort of market cap wise? Where do they fall?
So we got 50% in mid and small caps and about 50% in the large cap formats currently.
And did you buy last week? Were you sitting on cash and then this correction came and were you buys after?
We participated. So we have, I mean, the portfolio did correct in line with the market. So we are not really in isolation, but this is just a construction phase of the marketplace. So if I just step back, you just need to also realize that we come out of a fairly profitable 2023. And 2024, the last time we had this conversation also, we were fairly, I mean, our best case scenario for 2024 was a marginal return or a flat return for 2024. But we need to look forward from that. I mean, let's put it this way. Markets are expensive, whether it is at the top end of the market, which is large caps, mid caps, or in the small cap space. There was something happening in this mid cap and the small cap space, which was completely unexplainable. And I think that is winding down right now. So closer to this end of this year, I think we will be able to format ourselves into what to look forward for 2025. It is not that profitability is not growing. It's not that the opportunity is not there. But if you continue to focus on what's happening in the marketplace in the immediate time, I think you'll lose focus of what could emerge into the next year. And 2025 is, I mean, our sense is it could be fairly robust.
Okay, got it. Kenneth, hi, good morning. I wanted your thoughts because, you know, these stocks are now seeing some momentum. The auto names, right? The government is very keen on electrification of vehicles. They've come out with several initiatives, not just for global OEMs to come and set up shop here, but also for like PLI benefits for the local manufacturers as well. Do you think that this space is now going to see a structural up move? And is there more to go for some of the large incumbent players?
So I use a slightly broader brush for this, right? You said all the words out there. Okay, it's a focus by the government. There's a lot of PLI schemes that are there, and all companies are eligible for those benefits. Now, this is not the only industry that has done so. It's happened in electronic manufacturing. It's happened in pharmaceuticals. It's happened in chemicals, and you can go backwards and you see virtually every industry has gotten some level of stimulus from the government. Now, this is basically what would play out between 2024 to 2030. At least in the first couple of years, till the industry has been able to finalize technology and put in a product into the market, profitability is dependent upon incentivization by the government. And once you hit scale production, I think then it's left for your competitiveness and your customer-facing businesses to actually deliver the profitability. So this is the case not just with India, it's the case across the world. So this is one of the biggest thematics that are playing across the world, which is incentivization of manufacturing is essentially to bring business back home and drive that opportunity to make sure that you, as a country, whether it's India, Middle East, Europe or the US, you are very self-dependent on the internal structures. So yes, there are opportunities. The size and scale of these benefits are reasonably large. And once we've been able to hit critical sizes, a country like India will hit critical size very fast because we've got a very large population out here, which is also a consumption base, right? So I think that's thematically how each of these opportunities will play through right through the end of the decade. So I wouldn't stop at automotive. I'll just look at every industry who's got benefits across the board.
Kenneth, so 50 to 60% of your portfolio is in pharma, infra, energy and manufacturing broadly. How would you like to construct the balance?
We've got a commodity exposure, and I think that's something that I have mentioned it, but we probably not there in terms of how these stocks have done, at least in the near term. But going into the next couple of quarters or maybe the next year or so, I see commodity prices bouncing back. Now, this has got a couple of situations that will have to emerge for this to happen. Primarily, it has, I mean, commodity prices have to go up, whether it is soft commodities or whether it's metals or anything in the intermediate, including chemicals. And this will happen because supply will get constrained or the price points internationally will go up, which is effectively inflation. Okay, so we see, we see demand coming through, and the demand is driven by governments. It's a marketplace, or it's an economy across the world which is driven by B2B businesses and B2G, which is business to government. Okay, and that's essentially where all the volumes take place. So we've been in a corrective so far as commodities are concerned. Most of that correction should, if it's not already over, should get over the course of the next quarter or two, and we'll have to see how that emerges into the next year, which is 25 and 26, to see how some of these behave. So that's why we're building up our portfolio, and through the course of the next couple of quarters, that's how our portfolio will emerge.
Sorry, which commodities are these, Kenneth?
In particular? Paint them with a broad brush. It will obviously the basic commodities of metals, anything that's led to infrastructure, and everything that is there which is in the soft commodity space or agriculture commodity space.
Yeah, no, actually I was coming to agri because that's been a long favorite of yours, right? Although I don't know if performance-wise has that played out to your expectation, or you think it will now?
No, I think the focus here is across the board. I'm not going to restrain ourselves to just one part of the piece. Till now, agro commodities, whether it is agrochemicals, fertilizers, seeds, etc., they've been reasonably subpar in terms of performance, but they've been okay as far as the index is concerned. But to get that right, I think we need price inflation that comes back.
Okay, just a question on the larger view of the market, given that we, come April 15th, we'll be talking more about elections. You have the first, the start of the US Fed rate cuts as well that could take place from the next policy onwards. How are you approaching the markets now? Do you think that this could be a phase of a painful time-wise correction in the market rather than a price-wise correction? Because that's something that a lot of people are now talking about.
2024, I have very little expectations. Like I said, our best case is that you get a single-digit return, or it'll be flat. And I think that's how we're approaching 2024 from. And like you also mentioned that there are a lot of events that will come through. Now, all these events are and when you see it, what happening on the business side is linked to just one situation. How do individual companies get self-dependent? Okay, and we've seen a structural shift towards whatever the outcome of the elections are, we're seeing a structural shift towards tariffs going up in every single region or every single country. How that is going to play out is going to be a question mark. What are the trade realignments that are going to take place? How much as individual countries, who's going to benefit? I'm sure we are one of those economies which are still low cost in terms of manufacturing that has a leg into all of these opportunities that are there. So I'm not I wouldn't worry too much about 2024 and 2025 also. And there's one single thing that is very different this time around compared to all the sell-offs that we've got in the past, right? And I'm not that I'm saying this is a sell-off. Is this time around, companies got a lot of cash on their balance sheet and are ready for the next cycle.
Correct. Got that. Understood. Thanks a lot, Kenneth, for joining in. Appreciate your time here and hope to see you again very soon. Well, the market is very quiet. It hasn't done anything in the early morning trade, just consolidating around the 22,000 mark. But one space that's getting a lot of eyeballs is the electric vehicle manufacturing space. The government has approved a new EV manufacturing policy to attract global players like Tesla and VinFast. The policy will see the import duty cut by up to 75%. The new policy requires EV companies to invest a minimum of 4,150 crores, and the companies must also set up a production facility within 3 years. Pawan Goenka, who is the former MD of M&M and an auto industry expert, he's been with the sector for decades now. He joins in. We also have Arun Malhotra, who is with us as well. Gentlemen, morning to both of you. Mr. Goenka, let me start with you first. I want to understand from your end about this new EV policy. Do you think the incentives are enough for global OEMs to come and set up shop here? And if yes, what do you think this would mean for the incumbent players? If a manufacturer like Tesla comes, sets up shop, manufactures in India, brings down the price, do you think it's a big worry for the incumbent players?
Good morning, Sonia. Nice to be here on the show, and thank you for inviting me. I want to start off with a couple of disclaimers. As you know, now I work for the government, so I want to make it clear that whatever I'm saying on this policy are my personal views. I have no insights into the thinking behind the policy. And just like many people had given their opinion, I had also given my opinion on it. But beyond that, I have had no influence on it. So let me come back to the policy. I think it's a fairly aggressive move that the government has made. And there may be argument on both sides. Is it too much or is it too little, as you have pointed out? But I would kind of put two considerations in place. One is that government has been really pushing electric vehicles for the last 5-6 years very aggressively. While we have had good progress in three-wheelers, decent progress in two-wheelers, but passenger vehicle, the needle really hasn't moved. We have only reached about 2%. When the world is at 15% plus of EV penetration. And therefore something big had to be done. And I think in many ways this probably is the step that's going to accelerate the adoption of passenger vehicles in electric in India. And if we get 2 to 3 greenfield plants because of this at $500 million each plant, I think we will start seeing a lot more EV penetration. We should also say that the government has put enough guardrails. Enough guardrails in terms of minimum investment required, in terms of maximum volume that can be sold, in terms of maximum reduction that can happen in duty. And therefore, it's a fair, good balance of giving a very good incentive of 15% coming in at CBU, at the same time requiring significant amount of investment and putting a constraint on what can happen. And therefore, I think it's a balanced move. It should be good enough for the new incumbents to come in and try and establish a plant here, not just to sell in India, but hopefully to export from India. And I think the price level is high enough that the current incumbents should not really feel too much of pressure. Even if they get into this price range, don't undermine what they can do with their technology and with their cost base.
Correct, correct. I know, I take your point entirely, but I want to talk a little bit about this under 3% penetration, right? As you rightly said, I mean, India is not even at 3% penetration, while the world is sitting at 15-16%. Do you think it is unfair at this point in time to open up global competition at a time when the incumbent players are still struggling to sort of penetrate the market?
Well, we have to look at why we have not penetrated enough. And I would say 3 or 4 things. Number one, the charging infrastructure has really not spread well in India yet. Number two, the number of products that are available to the consumers are very limited. We have product in the sub 20 lakh range, which are sort of small vehicles, and then we have product at very expensive price point, and therefore there is not a good choice for the consumers. And number three, there is not enough localization that has been done. And that becomes chicken and egg situation because we don't have enough volume and therefore not enough localization. And therefore the need is that we have to have scale for electric vehicles. And the scale will come only when there is an aggressive move. Now, I'm pretty sure that Mahindras and Tatas, who are working on new products, Tata has already launched their electric vehicle architecture platform. Mahindra will launch in about a year or so. With that, I don't think they will be at a disadvantage compared to anybody who comes in. because they will have fairly good product, fairly good technology, and from whatever I have seen in the print in terms of photos, I think their products will be very competitive to anyone who comes into India. So don't undermine the ability of the Indian players to be able to compete with whoever comes in because of this policy, and the need to bring many players in was an absolute need. We cannot wait another 2, 3, 4 years for that to happen.
Absolutely. Gentlemen, good morning. Prashant here. Mr. Malhotra, if I can sort of come to you, what is your first sort of sense of the policy which has been announced? You know, I was reading some reports which were saying that with the lower import duty, etc., I mean, there's always been a great deal of excitement about Tesla and, you know, what that can do in a market like India, etc. So taking Tesla and their lowest price model and applying the lower import duty now, on-road price for a Tesla model perhaps is just going to be about 40, 42, the minimum that a Tesla model will be available here. So what does that do to the market dynamics in India in your assessment?
So clearly, as Dr. Goenka mentioned, it's a welcome move because you needed some acceleration, some catalyst to open up the EV ecosystem because we are struggling. And clearly, when you allow players to come in the market and create, I think, more a supply chain also and an ecosystem, and India as a destination for global manufacturing, it's positive. But the other part to look at it is, if you slice the market today, although the contribution is 2.2%, and if you take a 40 lakh price band, the contribution shifts, it's only 10% of 2.2. So effectively, we are actually focusing on a microscopic minority of the market. Now, we can say that the technology comes in, supply chain comes in, it will move downwards. But I think the bigger challenge is the mass market, the price point between 10 to 25 lakhs, I mean, which government very rightfully has not allowed Tesla to come in. But that is where the action is required. So in the long run, probably this policy could help in creating an EV ecosystem. But in the next 2, 3 years, I don't see it really bearing fruit because the real action will happen after 3, 4 years. And I think the government's plan to have 30% penetration of EVs in 2030 is a far dream. To that extent, it's a mixed bag. It's positive in the long run, but in the short and medium range, the challenges of range, reach, aspiration, affordability is going to still hold back the EV market. And let's not forget, we have other technologies also competing with EV in the passenger vehicles, the flex fuels, the CNG, the hybrid. So that way, all these have to be seen, and probably the fine print of the policy, which probably will follow, has to be observed. The other point is a lot of EV manufacturers in the luxury cars are already there. They've also made investment. Are we treating their investment retrospectively or not? That is also a question which needs to be looked into.
Mr. Malhotra, your thoughts on the localization target, which has been set 25% in 3 years and 50% of a domestic value addition in 5 years. Will that be a deterrent? Will that be easily achieved by the players who come in?
I wouldn't call it easy, but I won't call it deterrent because 3 years is quite a big time, and the push of the government in production-linked incentive, in advanced cell chemistry, and also to some extent FAME policy, that will help it. And we already have also investment in semiconductors. So for a large corporation who's serious on EV, I don't think it will be that big a challenge, although it's a task they have to put in focus into.
Okay, Mr. Goenka, I want you to come in on, the flip-flop of policy as well, especially what we're seeing in the EV two-wheeler space, right? I mean, if you look at the numbers, two-wheeler penetration is just 5% of sales currently. But again, subsidies have been reduced. Vehicle prices went up recently by about 20 to 35%. So that once again impacted the pace of EV adoption in two-wheelers. Now, if you map the last 24 months, the share of EVs in two-wheeler sales has been in this 4 to 6% range for a very long time. Do you think that could rise anytime soon? Because of this flip-flop, do you think that's a big deterrent?
I think it would rise. First of all, let me state that the big sort of government subsidy cannot remain forever. And the industry has to get used to sort of reducing amount of FAME benefit or reducing amount of PLI benefit, which of course is for a limited period of time. and the industry has to work on lowering the cost and being able to sell at the same price with a lower government incentive. Now, what's changing now in the two-wheeler is that scale is coming in. And with the scale coming in, more and more localization will happen, and the prices and cost will therefore come down. And hence, the industry would be able to support, even with lower incentive of FAME, the same price point that we have. That's one change that's happening. Second change that's happening is that the bigger players now are coming in more aggressively in the electric two-wheeler segment. I have seen in the Bharat Mobility Show the kind of products that are being displayed with the traditional two-wheeler players. Very good products, and I'm sure they'll be able to come in with a very good price point also. So given these two things, I think we will see a significant increase in the two-wheeler penetration over the next 2 to 3 years. I don't think that the two-wheeler sector will depend so much on the government incentive as it has been in the past.
Okay, Mr. Malhotra, your thoughts on what else is needed for for two-wheeler penetration, EV two-wheeler penetration to increase in India? Because some of these players like TVS Motor, etc., have really sort of risen quite a bit. I mean, market share has gone up tremendously with the TVS iQube, for example. But what else do you think needs to be done for more EV penetration in the two-wheeler space?
One of the challenges, what Dr. Venka said, right, is that now more of the legacy players are aggressively getting into it. There is more also awareness around it. But I think the one of the biggest challenge in the two-wheelers is that the motorcycle market, which in two-wheelers contributes 2/3 of the market, that is 60%, we have hardly any presence in motorcycles as far as EV two-wheelers concerned. Of the two-wheelers EVs which you are selling, I mean, you sell about 80,000 a month, hardly it will be 1,000 a month, which is there. So there's something need to be done. And one of the reasons for this was that for the FAME benefit, we kept a cap of 1.5 lakhs. That has to be the factory price. And somehow the designing, developing a motorcycle at that price point was just not possible. That's why that has not happened. So if we have to penetrate to rural, we have to penetrate to motorcycles, there has to be some special focus on motorcycles. Otherwise, we may go up, but it is like saying, if you're only tapping 1/3 of the market, the penetration can't go over more than 10 to 50%. That's the way I see it.
Okay, gentlemen, thanks a lot for joining in. There is a lot more that needs to be done for this EV adoption to increase. And now with global OEMs as well getting incentivized to come and set up shop, the government clearly has one agenda on its mind, more electrification of vehicles to increase the EV penetration across the board. And they're trying to do that through several initiatives, whether it's the new EV policy, whether it's PLI incentives, also for the domestic manufacturers. But moving on, we have a big announcement to share with all of you. We are launching CNBC TV18's first ever live personal finance webinar called CNBC TV18 Accelerate, the personal finance handbook with me, where I will be curating a 3-hour, special personal finance course with 3 well-known experts. This happens, mark your calendars, on the 11th of May, 9 a.m. onwards. We're diving into everything you need to know to master your finances, to learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There'll also be a 1-hour Q&A session where you can ask all your questions on personal finance. Whether you're in your 20s, 30s or even your 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. All you need to do is scan the QR code on your screen to register or log on to cnbctv18.com, and we'll see you on the 11th of May. All right, let's take a quick break. On the other side, we'll be joined by the management of Electronics Mart India to discuss their demand trends and outlook on the business going forward. We'll also be joined by the management of BLS International Services to discuss their business plans in just a bit. Stay tuned.
Welcome back. You got the market, which is down about 50 points. 21,971 is where the Nifty finds itself at. By the way, market breadth is completely evened out, almost 1:1, 1,150 higher and about 1,070 stocks which are lower. There you go, almost there, equal 1:1 ratio. Let's focus on Electronics Mart. The stock is up 3x since listing last year. The company has 147 stores across 36 cities. To discuss what's business looking like now, we have Mr. Prem Chand. He's Chief Financial Officer at Electronics Mart of India. He's, of course, joining us from the 9th Motilal Oswal Ideation Conference, which kicks off today. It's going to run today and tomorrow. where the ideate on sort of future winners in the mid-cap and small-cap space largely. So great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. The great excitement with your operations recently has been what you're doing in NCR. So could you give us an update? How many stores do you have now in the NCR region? I think you told us that by the end of FY24, you'll be up to about, I think, 20 stores. So where are you now? How many do you have now? And, what are you seeing there in terms of growth, in terms of footfalls, etc.?
Yeah, thank you. Thank you for having me on your show. As we speak in NCR, we have over 15 stores as we speak. And we are planning to add at least 5 more stores by end of this financial year, so that count will be close to 20. And compared to last year, there is definitely stabilization happened in NCR. So our footfall has gone up. So of course, last year was uncomparable because we were not operational throughout the year. But quarter on quarter also, when we compare, there has been significant growth, which is almost triple-digit growth in terms of the footfall and the throughput of the stores.
Are these 15 stores which are operational, right, and 5 more by the end of this year? Is the throughput much higher on an average compared to stores in other parts of the country?
No, that is not true. They're stabilizing. Maybe over the next 24 months, they will reach the levels which we are operating in Hyderabad region.
Okay. So have you laid out plans for FY25? By the end of March, FY24, you will have 20 stores in NCR. What could that number go up by in the next 12 months, say by end of FY25? And what would the revenue contribution be?
See, next year we will be adding 10 more stores in NCR. And then, of course, our focus will be more on AP and Telangana regions as well. So, both put together, I think we will be adding at least 25 stores more in the next financial year.
Okay, we'll be adding 25 stores more in the next financial year. Got it. So, can you tell us what are you targeting in terms of your same-store sales growth over, say, the next 1 to 2 years? I think 9 months your SSG was about 10.4%. But what can we expect over the next 1 to 2 years?
See, that will remain more or less same. Because the stores aging more than 10 years will have only single-digit SSG. And the stores which are aging between 3 and 10 will have the double-digit SSG. And the blended SSG will be around 10%. That's what we are targeting.
Okay. And can you help us with what is the competition looking like now, whether it's from large offline players, from conglomerates, from even the online players? Where does your biggest competition come from and how are you trying to combat that?
See, currently we didn't see the impact of these online players, especially in the large appliances and then these home entertainment the categories. So that's why we don't feel any threat from these players. When it comes to other organized players, it will be there even 3-4 years back as well as today. So that will continue and there will be a competition. We have to live with it.
Got it. And I think their ACs are the most profitable segment, right, for you currently as of now. Just a quick word on what will be the sales growth? You said blended SSG growth is what you're expecting is 10%. Say 525. What kind of sales growth are you looking forward to?
We are targeting about 15% top line growth in the next financial year. Even in the current financial year also, like we targeted 15% and we will be slightly above that. And that same trend will be continued next year. And during the current financial year, air conditioners and mobiles did exceedingly well. And hope the same trend continues next year also. Because mainly that AC sale is linked to the real estate growth, which is quite promising in the regions where we are operating.
15% top line growth. Will there be margin expansion in FY25 as the NCR stores also reach that maturity level and there will be an increase in margins from there? Can we expect any kind of margin expansion next year? And if yes, how much and what would be the drivers?
In Delhi, mainly NCR, currently we are EBITDA break-even. So that is going to be the trend is going to be the same for at least the next 6-4 months. If the summer season does very well, then definitely that margins in NCR will be improved drastically. So, but as per my assessment, it will take at least 24 months to have the same level of EBITDA margins in NCR.
Okay. Thank you very much, sir, for joining in. That's Electronic Smart. The stock is up 1% and the company is guiding for 10 stores to be added in the NCR region in FY25 and 15 in their South cluster. So overall, 25 store is the guidance given by the management and a 15% top line growth. The next corporate on our show is BLS International, and the company reported numbers about a month back. So Q3 was a decent quarter, but volumes were on the lower side. Also, the company had recently done a very large acquisition of about 450 crore when they acquired a Turkish-based visa and consular services provider called iData. Shikhar Agarwal, Joint MD and Chairman of BLS International Services, is with us on the show. Shikhar, morning, and thank you very much for joining in. In our last conversation, you said that Q3 volumes were impacted by seasonality and Q3 volumes were marginally down on a year-on-year basis. How has Q4 panned out for you? Have we seen a pickup in Q4 volumes compared to Q3 and even on a year-on-year basis?
Definitely. So even if you see our Q3 revenue, we achieved a revenue of 437 crores and an EBITDA of PAT of 87 crores, which was a good growth compared to similar quarter last year. So definitely the revenue and profitability has grown. In this quarter also, going forward, we expect to maintain, those numbers. Definitely volume is rising now, going forward, if you see in this quarter, next few quarters, next few years, volume has risen. So definitely revenue and profitability will become better. If you see the EBITDA margins that we achieved of 20% in the last quarter, we expect to maintain that EBITDA margins. In terms of acquisition, the company that we acquired, iData, we are still some final legal, things are pending. So we expect the transaction to be closed soon. So that will definitely give a further boost to revenue and profitability of the company.
Is there a delay in closure of the iData acquisition, or will it happen before the end of 31st March?
It is on track as per our schedule right now.
Okay, it's on track. Any new contract wins that you've got? Any new signings that, you're expecting?
Yes. So I think in the last few months, we announced new contracts. We won a new contract with the Czech government in Botswana. We won a couple of new contracts with the Hungary government, in different parts of the world. We were already working for the Hungary government in 3-4 countries. Now we have won 4 new countries with the Hungary government. So definitely, we have been winning contracts. If you see in the last 1.5 years, we won 10-11 new contracts. In addition to renewal, re-winning of our big major contracts like Spain, we also won the Indian contract in Canada again. And now with this acquisition, we further expect, for consolidation of our operations across the globe that will lead to reduction of our expenses, sharing of the overhead costs. And definitely, I think that could lead to an increase in EBITDA margins. Also, the presence of this company in newer geographies will give us access to new client governments and new territories will be opened up. So we expect good growth coming in different geographies of the world.
Shikhar, what kind of volume growth should we expect in FY25?
See, volume growth in terms of the business that we currently have, depending as we have seen, post-COVID, the countries which have fully opened up, which includes India, UK, Morocco, Algeria, we have seen growth actually, almost reach the same level 2019 in some countries, even surpassing that. But major volume countries, which were China and Russia conventionally for us before COVID, we had seen, in China some volume coming back. Then there was this Chinese New Year, so definitely, there are a lot of holidays in China in that period. But now again, we are seeing volume coming back in Russia. Still, the volumes have not come back to pre-COVID level. But having acquired this company, these new contracts that we have, achieved, we definitely see 15 to 20% minimum volume growth for us in next year compared to this year. New contracts that we have won deploying, and also the new tenders that we're bidding for, if some of those come on board, definitely there could be upwards of volume growth more than 20%.
So you said EBITDA margins could improve further going ahead, right? So what is the range you're looking at? You're already at 20%. How much more can you go? And also, if you can tell us, what is the cash on the books after this 450 crore payout to iData?
Yes. So EBITDA margins, we were achieving around 14 to 15% in the last couple of years. But, after, a lot of these, actions that we take like years to fructify. So we actually managed to achieve a 21% EBITDA margin. As a company, our objective is always to increase our profit in a sustainable manner. So definitely, I don't know the exact number, but definitely we would, we would ask our teams to work on increasing the EBITDA margins further. So I expect in the coming years, definitely we can increase by some basis points or a percentage or a 2% in the next few years. So definitely we see increase. The cash on the books right now, we have not paid the money because certain legal compliances are still pending as on when those are completed. So as of now, cash on the books is around 750 crores in BLS International, and BLS e-services, post the IPO, we've got 300 crores added in our books that will be deployed in the next 1.5 years. So right now, that is the cash on the books in both the companies.
Shikhar, do we have the updated iData numbers? Because when you did the acquisition, you had shared the 22 numbers, FY22 numbers of 180 crore and an EBITDA of 94 crore. But that's, dated now. So do we have FY23 numbers of the acquired company or calendar year 23 numbers?
Correct. So, iData follows calendar year numbers. So that is the last numbers that we have. I think some final due diligence and some final closure of audited numbers are going on over there based on the local country laws. So as and when we get those numbers and as and when they're provided to us and we consolidate in our balance sheet and profit and loss, we will definitely be telling it to the market.
What's the historical growth rate of iData on an average? Is it a high single digits? Is it double digits?
See, post-2019, post-COVID, the scenario of all visa outsourcing companies has changed drastically. So definitely iData from 2019, the numbers that they have achieved in 2022 are almost similar at the lines of 2019. And definitely, for them also, they have major presence in Russian territory also. So I think they work for the German government in Russia. So definitely those numbers can still have an upside possible when those numbers start coming in. There could be a major growth in the revenue and profitability of the company. And obviously, after we acquire the company, also we will do consolidation of operations across different territories of the world. So there could be a growth in revenue and profitability. iData has also seen a good, healthy growth of upwards of 20% year on year in their revenue and profitability. And going forward, we expect to maintain that or grow that further.
Okay, all right. We will leave it at that. Thanks a lot for joining in. We'll step into a quick break. When we come back, Manisha will tell us the latest in the commodity market. Stay tuned. Welcome back. Mitesh Thakkar joins us now to give us a view on how to approach the markets, which, by the way, is very quiet, but little bit of, it's taken a turn for the worse in the broader markets. Mitesh, hi, good morning. Your thoughts? The mid-cap index is now down 140 points. You think it could get worse through the day, and what's the best approach?
Good morning. So actually, I'm not sure if the things will, go for worse or for good, purely because of the fact that this is today now the fifth time in the last 4 days on the hourly candlestick charts that we've got a test of levels closer to 21,950, 930 and have seen some kind of a bounce back. I think now the next shorting opportunity should come either if you break below 21,950. Therefore, we have taken, a good part of profits on our short positions. The out of the money call option short can still remain. And in case we start getting past 22,150, then there'll be a stronger pullback before any kind of big decline happening. So in that sense, I think, it's a 100-point range, 200-point range when we don't have a clear-cut trade bias. So I think idea should be to go stock specific and then look at ideas over there. On the index, as I said, I think, the short positions have been covered up, but out of the money call options, if you're sold for the expiry of March, I think those positions are okay. I think they will go through their own time decay and the theta value should come in. So that's the way I'm approaching the index. On the stock side, I have a buy on Pidilite. I think, that's a stock which is showing good strength and continuation. So keep a stop below levels of 28.60, 28.55 here. Look for targets of 2970 on the upside, maybe more. And the other one is Adani Enterprises. Some, negative pressure on Adani Group stocks is visible. So we'll take a shot on Adani Enterprises with the stop just above 30.95 for a target of around 29.50.
Okay, all right. I got that. So that is calls coming in, long on Pidilite and short on Adani Enterprises. That's from Mitesh. Let's shift focus to the commodity space. Manisha is here with what's top of mind. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm looking at copper because that continues to rage ahead. So even as the dollar index is trading at a one-week highs, and that has put pressure on various other commodities, whether it's energy or precious metals for that matter. But copper prices have continued to surge on. We are trading at an 11-month highs now at above $9,000 a ton. If you look at the prices in last 1 week, it has been 5% of a gain. And the previous week actually has been the best weekly gain in 2024 till now. Well, that's about LME. When you look at the Chinese copper prices, they are at a record highs of 73,000 yuan per ton there. So very strong gains coming in for this one. Well, if you look at the reports, the major Chinese smelters have talked about a very rare joint production cut going forward, and that has taken to the markets really on the weaker side when it comes to the TC prices there. Also, China is an important one because 47% of refined copper production happens in China. More than 50% of the global consumption as well happens in China, and there is so much data coming in from China in this week, which the street will watch out for. So now Chinese copper smelter production cuts would mean that the refined copper supply would get limited, and that's exactly what the markets are reacting to at this point in time. There's a report from Citi which says that they are anticipating $9,500 a ton of prices to come in as well by the end of June in this year itself. So next couple of months also are expected to be quite on the stronger side. Fund buying has moved in, so the hot money chasing fundamentals is another reason that you have seen longs being created and the prices sustaining at these higher levels as well. As I was telling you, there's so much data coming in this week. You have the US Fed meeting on 19th and 20th of March. Before that, you have the monetary policy meeting also coming in from Bank of Japan, the US manufacturing services PMI, retail sales, and the housing numbers as well are expected in this week itself. Apart from the US Fed monetary policy meeting, there are interest rate meetings from Japan, Bank of England, Australia, Brazil, Turkey and Switzerland as well. And then you also have inflation numbers coming in from UK, Canada and Japan. There also is a whole host of Chinese numbers coming in this week. You have the industrial production, retail sales, fixed asset investments, loan prime rates, and also housing data coming in from China. If you look at what the metals have done in the matter of last week and month, it has been really positive. On a week-on-week basis, best of gains coming in for copper, but on a month-on-month basis, nickel continues to outperform there. The street does believe that by the time you close second quarter, you could be looking at the metal prices 5 to 8% higher from here on as well.
Thank you very much for that. A stock which is extending itself on the way down is Coforge. It's more than 5% gone on Coforge after the company approved a large fundraise of 3,200 crore, which will be done via one or more tranches via a QIP. The pricing and even the timeline of the fundraise has not been disclosed, but it's going to be a QIP. What's got the street by surprise is the quantum of fundraise because it's large. 3,200 crore is about 8% of the company's market capitalization. The funds, according to most people in the market, will be used to pare down their debt or perhaps make an acquisition to help the company achieve its dream of doubling its revenues to $2 billion by FY28. That plan includes an M&A component, and this money could be used to, go ahead and, make that acquisition. According to Phillip Capital, the potential revenue addition from this acquisition could be about 1,000 crore rupees or $125 million. So they're bullish on the stock. They have a buy rating. On the other hand, I was just seeing a note by Morgan Stanley too. And Morgan Stanley says, while the quantum of fundraising is a negative view, given Coforge's track record of good execution on acquisitions and the potential for the fundraise to be EPS accretive, they don't view it as a negative surprise for the stock's fundamental. But right now, as I said, it's the large size of the fundraise which has spooked the street, and there are fears of a dilution.
All right, Rima, thanks for that. You know, markets now slipping again. We're down about 60 points, but it's been that kind of a day. No real clear conviction, as Mitesh was also pointing out. So I went into absolutely flat zone, and very quickly there's about a 40-50 point weakness which has emerged on the index. Market breadth is also is actually 1:1. That, of course, compared to where we started at about 9:15 till about 9:30 is deterioration, because market breadth was pretty positive, and then now it's closed in. We'll take a quick commercial break here. On the other side, we talk about the pharmaceuticals space and something very interesting. We'll be joined by Vishal Manchanda of Systematics Group and Aditya Khemka of InCred PMS to put the spotlight on key concerns regarding the blockbuster cancer drug Revlimid. Stay tuned. Welcome back. Ekta is now, as promised, standing by on the big wall to put the focus on the key concerns surrounding the cancer drug Revlimid. Ekta, over to you.
Well, yes, thanks very much for that. Pharma retail majors such as Walgreens and CVS are seeking damages, alleging that the likes of Dr. Reddy's, Celgene, Natco and Teva took measures to restrain competition in Revlimid generic until 2026. Dr. Reddy's believes that the allegations against it lack merit and will vigorously defend the litigation. To quickly recap, generic versions of Revlimid were permitted to be sold in limited volume starting March 2022 until Jan 2026. Natco, in collaboration with Teva, led the launch, followed by Dr. Reddy's, Cipla, Zydus and others. Despite being a common occurrence for pharmaceutical companies to face such litigations and a known risk for Revlimid generic filers, concerns are due to the significant profits generated from Revlimid generic, surpassing initial expectations for most. Analysts estimate that the companies have annually earned anywhere from $200 million to $600 million since the launch. Dr. Reddy's, which launched with 2 strengths and exclusively in September 2022, appears to be leading. Revlimid generic accounts for 40 to 50% of its profit, with the company estimated to have sold $600 to $700 million worth of the drug till now. Natco, after a profit share arrangement with Teva, is estimated to have earned around $280 to $300 million till date. For Cipla, Revlimid accounts for around 30 to 35% of profits. The company is estimated to have sold around $300 million worth of the drug. Zydus around $200 million, Sun approximately $100 million, and Aurobindo around $50 million, according to analysts. Now, companies are anticipated to generate an additional $100 to $500 million in sales until the contract expires in Jan 2026, after which selling the generic version of the drug will be unrestricted. Estimates are Dr. Reddy's and Natco can make an incremental $500 million, Cipla and Zydus an incremental $200 to $250 million, Sun and Aurobindo $100 million each incrementally. This is not the first litigation, remember, with regards to Revlimid generic, with 1 lawsuit dismissed within a month to 2 lawsuits currently sub judice. Now, the risks associated with Revlimid generic lawsuit, experts argue, lies in its volume-limited sales, which could potentially bolster the case for price fixing. Say experts, what we could expect in the next 3 to 5 years is a possible settlement outside court, which is generally what happens. A settlement generally entails a percentage of profits made from the drug or even the entire amount of profits along with penalties. Past instances of substantial drug settlements include Pfizer's $93 million settlement over Lipitor generic, which took 12 years to reach a conclusion. Lupin's $250 million settlement over diabetes drug Lumetza, where majority of the profits were forfeited, to most recently Glenmark's payout of $87 million on cholesterol drug Zetia generic, highlight the potential magnitude of such litigations. While the litigation remains an area of uncertainty, the market seems to be unfazed. More so, the street seems to be taking comfort from the cash reserves, which stand at the following: Dr. Reddy's around 5,900 odd crores, Cipla over 7,500 odd crores, Natco at around 1,800 crores, and Zydus at over around 1,500 crores. This helps mitigate concerns to some extent, say experts.
All right, well, that's very, very interesting, Ekta. Thanks very much for that. Let's actually bring in some experts. Vishal Manchanda is pharma analyst, Systematics Group. Aditya Khemka is fund manager, InCred PMS. Gentlemen, good morning. Great to have you, have both of you with us here. Aditya, you know, as an analyst, as a fund manager, would you start discounting some level of forfeiture of the profits made and then start discounting these stocks to that level? I mean, how will this play out in your opinion, especially with the companies which have sold this drug and reaped a decent profit, very good profit? Go on.
Yeah, so thanks for having me and good morning to everyone. We don't necessarily look at it that way. I think litigation, when it's sub judice, very difficult to say how it will turn out. But yeah, the way the contract is structured, if we just go through how the companies have been allowed a minimum volume share, a maximum volume share, and then the pricing in the market, to my understanding, hasn't really corrected much despite a generic launch. So these indications do point towards a potential, investigation and a probably adverse outcome for companies selling generic Revlimid. However, till the matter is sub judice, it's difficult for as a fund manager or as an analyst to discount the eventuality because you don't know the quantum of the penalty, even if there were to be a penalty. However, what you should look at is that this revenue stream cannot continue beyond FY26, and hence, the multiples of these pharma companies need to be looked at on the basis of their base business, excluding profits being made from Revlimid. And as Ekta was saying, the profits from Revlimid can account for, in some cases, as much as 50% of the net profit that the company is reporting, and in some cases, 10 to 20%. So these stock prices or these market caps need to be looked at in context of their base business profitability and not the profitability including Revlimid.
Okay, all right, that point is taken. Vishal, what is your sense? Which are the companies which are probably slated to make the maximum when it comes to Revlimid generic and hence would probably be at more risk when it comes to a possible litigation?
Good morning, everyone. So I think Reddy's potentially has made the most out of the Revlimid opportunity, and probably they would also make almost the same money as they have made in the last 2 years in the next 2 years. So a very large amount here at stake. Natco, I think, is a bit hedged here because they are not the front-end player in the Revlimid market. They have a partner, Teva. So my understanding is Teva potentially would have to bear the liability, while Natco would be hedged in terms of they may not have to face any adverse outcome of the litigation. While others, all those players who have a front end in the US and are marketing the product on their own may have to face the entire liability at their cost, if at all a liability arises. So we'll have to wait and watch how the litigation unfolds. But obviously, Reddy and Natco has a larger stake here. Even Cipla has a meaningful stake, I would say.
Okay. All right. Well, Aditya, in the past, we've had quite a lot of instances, say, for example, Lupin and Glumetza. We've had Glenmark and Zetia. We've had Pfizer and Lipitor, where there have been large amount of settlements which have taken place. So is that something to probably go by, a past precedent to probably take note of when it comes to Revlimid generic and the litigation?
Yeah, that is definitely a past precedent. And, there are other drugs which were also litigated, but probably there were not penalties which are large enough imposed. And hence, we don't talk about those trials as well. So there is a past precedent, yes. And as I said, when we read the contours of the settlement as they are disclosed in the annual reports of these companies, it does look like an extremely structured and extremely defined, with market share defined sort of an agreement. And if you look at it from an anti-competitive lens, one would, as a layman, think that these are probably anti-competitive practices. However, how the regulator looks at it and how the companies defend it in the court of law is something we'll have to see.
Okay. Well, Vishal, why is the market absolutely unfazed by this possible litigation and this possible penalty? It could probably culminate 3 to 5 years down the line, maybe even later at this point. But why is the market completely unfazed by it right now?
Yeah, I think so. The valuation to me appears stretched, and I would have expected a meaningful correction. So you can't really say here what the outcome would finally be. And as you said, the outcome is not imminent. It might take several years before we see an outcome. And until then, there might be a lot of changes that can happen within the company. So they have large cash positions which they can deploy for meaningful growth opportunities. So people, I think, are a bit optimistic. And as the markets are also optimistic at this juncture, they would rather expect companies to be able to get other growth avenues in their business and probably mitigate the risk that we foresee on account of Revlimid litigation.
Okay. All right. Well, is the best, Aditya, from Revlimid generic actually factored into valuations right now? And what is the growth story post-Jan 2026?
Yeah, so look, the base business will definitely continue to grow for most of these companies, because they have an India business, they have an emerging market business, an API business as well, where there is clearly tailwinds to their businesses. And hence, we expect the base business to continue to grow even beyond Jan 26. However, once the Revlimid profits get knocked off by competition and free market dynamics in Jan 26, on a consolidated reported number basis, FY27 versus FY26 will clearly be a year of decline in profits and cash flows. And as Vishal was saying, basically how the companies use the cash that they are generating out of this opportunity by FY26 will probably define as to how much that profit declines. And make no mistake, there is no other opportunity like Revlimid on the horizon. People talk about patent cliffs, people talk about drugs going off patent, but none of those drugs going off patent, nor that patent cliff, has any kind of a contractual agreement like these guys had in Revlimid. So, there will be a profit decline coming in FY27 for most of these pharma companies versus their FY26 numbers, just purely because Revlimid will not be there in FY27 and it will be there in FY26. So is it discounted in the valuations today? The fact that it will disappear in FY27? Probably not. If I look at the numbers, it doesn't seem that the eventuality that these profits will evaporate in FY27 are discounted in valuations.
Okay, all right. That's an important point to note. Aditya as well as Vishal, thanks very much for joining in and giving us all of that perspective when it comes to Revlimid generic. This is definitely a story to watch as it unfolds, but we will keep an eye out on that. As of now, for the Nifty, absolutely flat. We have a little bit of pressure in the mid caps. It's a wrap on Bazaar. Chartbusters up next. Stay tuned.